But with regard to some of those questions that we were asking Randy Kroszner right now with regard to the Bank of Japan, I mean, this idea of moving interest rates higher, but at the same time expanding or getting some of these bond purchase programs. Randy, are you back with us?
I'm back. I'm sorry about that.
No worries. I guess what we were trying to address, and I think what you were trying to get at, there's this raising, right, of the ceiling for interest rates in Japan. And at the same time as this kind of tightening policy, you've also got the Bank of Japan kind of expanding its government bond purchase program, which would add liquidity to the system. This all seems like it would cancel each other out.
Yeah, as we were saying, it's never simple when it comes to the Bank of Japan. So they're allowing the 10-year rate to go up a little bit more than it had been before. So that's gotten markets very excited. The 10-year rate in Japan has gone up 10, 15 basis points. We've seen a big knock-on effect for government bond yields around the globe, including the U.S. More than 10 basis points move up in the U.S. But at the same time, the Bank of Japan has said, hold on, we're not abandoning our framework because we'll buy more bonds to make sure that we keep the 10-year rate in the same range, or at least they're committing potentially to buy more bonds to keep it in the same range. One of the challenges they had is that their yield curve control focused on the 10-year, not really on the whole yield curve. And so because inflation has actually gotten much higher than it has been in the past in Japan, 3 to 4%, which by Japanese standards is very high. We haven't seen that in 30 or 40 years there. The 8 to 9 year yield was much higher than the 10-year, and then anything beyond the 10-year was much beyond that. So they're trying to get a little bit better market functioning. They're saying they're going to bring more firepower to try to smooth that out. But I really do think this is a step towards tightening.
You know, Randy, what's interesting about this, for the longest time now, that we've been trying to see if there's been any way, and I say it kind of rhetorically, if there's any way to jumpstart price movements higher or inflation in Japan. It's been non-existent for maybe even decades at this point. Is it all a bad thing, I guess, that we're seeing the kinds of movements that we're seeing in prices and interest rates in Japan? Isn't it kind of more normal for us to see those kinds of moves? Doesn't it bring Japan back up into somewhat of the same realm as other developed economies around the world?
You're certainly seeing inflation be much higher than it has been before. I mean, they're at 3-4%, which is much higher than zero, which is effectively what they've been 0 to 1% for a long time. It is above where their target is. The key question is it, much like in the rest of the world, moving much beyond their target, and how difficult will it be to bring it back down? And so I think that's why they're taking this first very gentle step in this direction. It was a surprise move by Kuroda-san. Kuroda-san likes to do surprises, and I'm sure we'll get some more surprises before he finishes his term in April.
So this is an excellent point. Before we let you go, Randy, this is a preeminent central banker in Japan who is going to step down in the spring of next year. What exactly will the next Bank of Japan governor be facing once Kuroda steps down?
So I think what he's trying to do is provide an easier pathway for that for the next governor to be able to just tighten if need be. We would be delighted to have only 3 or 4% inflation right now. In Japan, that's considered a very high rate of inflation. People have gotten used to inflation being roughly around 0 to 1. So there's a lot of political pressure to do something about what is perceived as high inflation, and this is a step in that direction that'll make it easier for the next governor to try to deal with the issue.
All right, Randy Kroszner, former Fed governor. Thank you very much. We appreciate it, sir.
Thank you.